Good morning, ladies and gentlemen. Welcome to the VINACAPITAL Vietnam Opportunity Fund Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted any time via the Q&A tab situated in the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and will publish responses where it's appropriate to do so. These will be available via Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Khan Vu of VINACAPITAL Vietnam Opportunity Fund and the team. Good morning.
Good morning, and thank you for this opportunity to present on the Investor Meet Company platform. My name is Khan Vu. I'm Deputy Managing Director and Portfolio Manager of the VINACAPITAL Vietnam Opportunity Fund. I'm joined here today across two countries. On one screen, you see our Chief Investment Officer, Andy Ho, and our Head of Research, Chief Economist, Mike Okolari. They're sitting in Ho Chi Minh. Ismail Pili, our Head of Research, and myself are sitting here in London. Vietnam has just recently opened, and we've been able to get back on the road to meet with investors. This morning, we'd like to give you an update about Vietnam, our fund, and open up to questions. The agenda this morning, we'll start off with a brief introduction to VINACAPITAL, our firm. From myself, Andy Ho will talk about briefly about the situation of COVID in Vietnam and where Vietnam is standing in its progress to live with this pandemic. Follow on from this, Mike Okolari will give an update on the macroeconomy. Ismail will give a brief update on the market. And then we'll turn back to Andy and myself to talk about the portfolio, our strategy, and the opportunities that we find we're looking ahead as we recover from this pandemic. VINACAPITAL was established in 2003. It was actually established with this fund, the VINACAPITAL Vietnam Opportunity Fund. Back then, in Vietnam, the public markets was very much in its infancy. We had probably about 50 listed companies. So as a firm, one of the first investments we made was in private equity. And today, we are one of the largest private equity investors in Vietnam, if not the region. Today, we manage as a firm over 3.7 billion of assets under management, in which 1.4 billion is with the VINACAPITAL Vietnam Opportunity Fund. We have about 70 investment professionals, and we invest across the asset class spectrum from fixed income, public equities, private equity, venture capital, real estate, and energy. So this morning, Andy, perhaps I can hand it over to you on the ground there in Ho Chi Minh. What's happening? What's the latest there?
Thank you, Khan. Good morning, everyone. It is afternoon time in Vietnam at the moment. So on the situation with COVID, I think most people around the world have heard that Vietnam has gone into a very restrictive movement period over the last couple of months. And as a result of that, we've had some trouble with productions of goods, particularly to exports to the United States and Europe, and more specifically, in particular to the holiday season coming up. The situation has been pretty challenging. Having said that, the government has moved to a mental state of living with COVID now, and over the last couple of weeks, the economy has started to open up. Restrictions have been removed. Factories are open again. As of today or yesterday, I've heard that all of the factories from Nike have been completely open, so they're back in business. Hopefully, they can produce enough shoes and sports equipment for the upcoming holiday. But in short, the economy is trying to recover to its normalcy. The challenge is getting everyone vaccinated. Those in the city of Ho Chi Minh City and Hanoi are fully vaccinated, quite a high percentage. We're about 80 to 90% fully vaccinated. But the folks living in the provinces, we still need to get more vaccines out to those folks, and it's going to take a bit of time. But for the moment, I think the economy is coming back, trying to come back to more normal. The retail side, the service provision sides, the restaurants, hotels are open and ready for business. And hopefully by the end of this year, we'll try to reach the normal level of operations and business activities at a pre-COVID level. Thanks.
Thank you, Andy. Certainly here in London, things have returned to normal. So it does give us some comfort that when things come back to normal, it'll be very exciting. So I'm just going to flick through. Mike, just over to you on the macroeconomic update. Perhaps you can give our audience here an insight into where we're standing today and actually, what it looks like ahead.
Sure. If you go to the next slide, yes, you can see, as Andy mentioned, that with the COVID outbreak over the last 3-4 months, the production, got hit quite hard, and the stores were closed, retail stores were closed, et cetera. On the next slide, you can see that the GDP growth will probably be around 1.5% this year. And on this slide, on the picture on the right, you can see that a lot of countries in Southeast Asia, the GDP got hit really hard because the Delta variant obviously went, throughout Southeast Asia. Look, the good news is that we expect a really vigorous rebound in growth next year, probably over 7%. We actually had, yesterday, it came out the news from the government that they're working on a fiscal stimulus program that will probably be over 10% of GDP. It's very likely, my colleague Khan, who's in London right now, just mentioned that, they're able to travel. That means that soon people will be able to travel here as well. So it's likely that we'll have some foreign tourism resuming, at some point next year. So all these things together make us quite optimistic that we'll have a vigorous rebound in GDP growth next year. And then on the next slide, what you can see here, now this slide's interesting because this slide shows you what happened to the mobility of people, particularly people going to work. And what's interesting about this is that the reopening, which has happened, has been so sharp that if you looked at the up-to-date figures, literally like within the last week or 2 weeks, before my coworkers went to London, you would see that there's been a really sharp rebound in all of these numbers. So there's a really vigorous rebound happening if you look at the very latest day-to-day updated data. Yeah. So on the next slide here. Now this is interesting because, as Andy alluded to, there's a lot of factories that have had difficulty producing products like T-shirts and Christmas ornaments, furniture, things of this nature. And that's attracted a lot of attention in the press. Now, if you take a close look at the firms that are actually discussed in these articles, they're primarily manufacturers of low value added products. And what we see is that the producers of high value added items like electronics, smartphones, things like this, they've been able to navigate better. And so what we see is, despite what you see on the left on this slide, the FDI inflows into electronics and high tech industries is still increasing at a quite a rapid pace. So on the next slide here, yeah, you can see again here that the manufacturing, really sold off and coming back. Electronics production is bouncing back. You can see that here. And then and again, these are not the very, very late. Literally, the very latest data is like a couple days old. So what you would see is that a sharp rebound in these numbers over the last few days, literally. And that rebound started in August, September, and it's actually continued surging since then. Yeah. As I mentioned, the very latest data for mobility of people moving around the city has had a really sharp rebound, and you can see that again on this slide here. So, okay, so the main thing I really want to leave you with, the main conclusion I want to leave you with, is that the Delta outbreak was quite difficult in Vietnam for sure, but the FDI story is still very much intact. Andy mentioned Nike. Actually, Nike said that they're still going to plan to expand their capacity in Vietnam. The amount of FDI flowing into electronics is up about 20% this year. So the Vietnam growth story in general is still very much intact. And so that's the main thing that I want to leave you with today.
Thank you, Mike, for that. And that's encouraging news. And certainly, as Ismail and I left Vietnam 2 weeks ago almost now, things were beginning to open up. And so it's really encouraging to hear that, that really has taken hold, and that's important. I think, as Andy mentioned earlier, this mindset of living with COVID is probably something that we will probably have to embrace, and certainly here, as we've found in our travels, living with COVID is actually quite an acceptable way of living. Ismail, can I turn over to you just for a market update?
Sure.
Please.
So I'm starting out with this slide to show you how the VNI, which is the main stock exchange index on Ho Chi Minh Stock Exchange, has done since the COVID started. As you can see, there's about 4 bouts of outbreaks that happened over, I guess, back in January 2020 all the way to where we are now. And yet what you find there is that every time an outbreak came through, the market was very resilient. There would be a sharp rebound. And I think that's a big testament to the government's ability to handle COVID, to control the spread. And the latest bout that we had from April 27th to now, which is a 4th wave, was a little bit tougher in the sense that we did have very restrictive movement and also in terms of lockdowns. But that did not prevent the market necessarily from correcting sharply. In fact, if we updated this chart, we would show that we had recently hit an all-time high that broken through the 1400 level. 1444 was the close yesterday. And if we decide to, again, we'll talk about this later on, if we talk about the second half and 2022 outlook, we remain optimistic about the market's direction. Next slide. The big story behind Vietnam, of course, over the past couple of years or 18 months has been the rise of the domestic investors. They account for about 92% of the market turnover at the moment. That's 86% from local retail and 6% from local institution. The foreign institution is about 8%. Even though there's been some net selling for this year, largely because of either profit taking or maybe in terms of risk appetite, we are optimistic that the foreign investors will return, largely because the structural story for Vietnam has remained intact, as Mike has explained. If we go to the next slide. As a result of the domestic participation, the average daily turnover has hit $1 billion per day from one market alone. Year-to-date average, you can see on the right-hand side, we are now surpassing Indonesia, Malaysia, Philippines, and Singapore. Only Thailand trades more than us. And in fact, we are optimistic that this can be maintained because only 3% of the population have trading accounts at the moment. And the parallels we can draw, for example, with the likes of Taiwan in the mid-80s, when that very same number grew to where it is now, which is about 80%, it's several decades in the making, we think that will continue to happen, simply because the same conditions that happened in Taiwan exist in Vietnam, in the sense that there are limited investment opportunities. People either invest in property, time deposits, gold, or domestic equities. And at the same time, the interest rates are actually quite low. And so when you put all those things together, we do think that this will become a force that will remain going forward. As far as the market is concerned, there is high attraction in terms of the valuations and EPS growth. Even though the market has hit all-time high, the updated number we have here for 2022 is about 13.8, 13.9 times PE. The consensus estimate has not changed that much. It's still around 36 to 37% for this year, and it's a little bit higher now for 2022, around 24 to 25%. We believe that there is upside to those earnings estimate for 2022. We do think that, as Mike alluded to, a 7% GDP growth is easily achievable, and in that sense, we think that there will probably lead corporate earnings. And if you extend that insinuation further, corporate earnings tend to lead markets. Internally for VINACAPITAL, we had taken a very conservative approach because of what happened in the third quarter. Because of the harsh lockdown, there was a deep drop in GDP. I believe it was around 6.2% year on year. And I think the 9-month number was running about 1.4%. But mind you, we should emphasize the fact that Vietnam was one of the few countries in the world that had positive GDP growth last year at 2.9%. And this year, they'll still look at about 1.5, if you believe the government's numbers, they were from 2.5 to 3%. Still very respectable, which we believe is going to translate to corporate earnings. As we said, we are looking at anywhere from 16 to 20% EPS growth for this year. We think that there might be upside there because it seems the companies, as the 3Q21 results are coming through, are holding up better than we expected. But we do think that the market will still have to come off just slightly a little bit for FY21. But that just means that it works off a lower base effect. And we are looking at about 35 to 40% EPS growth for 2022. And as we said before, that will probably lead to the market. As I said, if we want to compare the valuations of Vietnam relative to its peers, which we would look at as ASEAN ex Singapore, if you want to get even more specific, you could probably just say focus on TIP, Thailand, Indonesia, Philippines. But the bottom line here is that Vietnam continues to trade at a discount relative to any of those benchmarks that I mentioned. Mind you, that discount might be narrowing, but not by any means of imagination. And again, if we put things in perspective, you cannot compare Vietnam now over the past several years to what it was at the start of 2010, 2011, because the genetic makeup of the market has changed so much more. Okay. As I said, the reopening will probably lead to the recovery phase of the market. We have seen this across the world, the US, the UK, and what that tends to happen is there's going to be a focus on value, on cyclicals. Data will probably take over. As far as translating that to the stocks and sectors in Vietnam, that will mean financials, real estate, consumer discretionary, and materials. And finally, in terms of our outlook, as I mentioned, we are optimistic for the second half, in fact, for the fourth quarter, and we think that can be extended to 2022. As I mentioned earlier, we do have a conservative approach, but we do feel that the consensus will still come off from that 36% number that they had. But that's just going to create a nice base, nice bounce for 2022, and their numbers will show stronger growth, and the PE will still remain below the historical average, which is around 14 and a half times. The key to all this, of course, is the fact that we are now getting higher access to vaccine. The procurement and distribution is actually easing the restrictions much faster than what they anticipated, and that will just instill greater investor confidence, not just for domestic, but also for the foreign investors. Again, the macro is quite supportive of these scenarios that we're painting for the stock market. Mike can probably elaborate more on the fact that the domestic inflation is quite low. He continues to believe that the US dollar will weaken against VND, and we do think that there will be a nice little bounce in terms of earnings and the market for the fourth quarter that will be extended to 2022. And I'll end the presentation there.
Thank you, Ismail. So just before we move on to talking about portfolio, perhaps just to summarize, as you heard from Andy this morning, Vietnam is really opening up. The Delta variant, the vaccine rollout has really allowed the markets and activities and social activity to open up. Mike has obviously laid out a picture that, yes, while there was a short and sharp correction, things have looked at recovering. We've seen that hockey stick effect in terms of mobility in September and October, and the outlook for GDP growth for 2022 is very strong. As Ismail mentioned, we're still one of the best performing markets. We are actually one of the best performing markets in the region.
Yeah, last we checked, we are the best performing market in Asia. We are up 30% year to date. In US dollar terms, it's up 32%. To put that in context, the next best performing market in Asia is India at 25%, but in US dollar terms, they're only up 21%. Sure.
So against that, we're looking at very strong earnings for 2022. And with that in mind, we'll move on to our portfolio. And as we discuss this, Andy and I will talk about some of the opportunities that we're looking at in 2022 to take advantage of this recovery and opening. So Andy, perhaps let me start with a bit of our strategy and our approach, and please step in with this. Our strategy, as we mentioned earlier, when we launched this fund, one of the first investments we did was a private equity investment. And through the years, this fund, we've invested in over 200. We've made over 200 investments. We look at opportunities where we can invest in businesses for the long term. Right? And that can be across private, listed, or alternative assets. We don't take short-term views. I mean, we don't take small positions. We're not activist investors, but we are very much active in the investments that we make. And that form of active investment comes through the level of due diligence that we do, the governance that we expect and put in the companies, the enhancements to management and operations that we do. And how do we do this? If you look at the portfolio today, we have, for that $1.4 billion, it's quite concentrated. We have about 20 listed positions. We have about 8 private equity and privately negotiated investments. We take long-term view in helping these businesses grow. And while we take minority positions, because we want to partner and grow with these businesses, we do make sure that we have protections in place to protect our interests and our investors' interests, and to ensure that there is some form of minimum performance commitment. When we look at the opportunities, we look to enter at valuations that are perhaps below listed market peers. We look to exit at premiums. And how do we do that? Well, by the stakes that we take, we can tend to take significant stakes that allow us to have a premium on exit. Also, we look at various options to ensure that we're not caught in a liquidity trap. So this strategy will elaborate as we go through some of the investments that we've made in the past year. Andy, can you perhaps sort of explain to our colleagues here why our investment strategy is sort of tailored towards investing in Vietnam?
Yeah, sure thing. So the fund was launched in late 2003, early 2004. At the time, a lot of the investment opportunities were illiquid. So we put it into a fund that's listed in London AIM. Now the fund is listed on the London London Stock Exchange on the main market. Now, this really allows investors to invest, buy the shares, and divest, sell the shares anytime they wish. At the same time, it allows us to have long-term capital so that we can deploy large amount of money, $30, $40, $50 million into each opportunity and help these businesses grow over time. Our investments can go as long as 10, 15 years or as short as 3 to 4 years. And typically over time, if the investment is long-term, we would take the company onto the stock market and hold on to them in our portfolio. At other times, we will enjoy an exit through the sales of our investment when we sell it to a strategic buyer. For example, we invested in the largest vodka business in Vietnam a few years ago, and we sold it to Diageo out of the UK. That's an example of a private investment, and then we subsequently sold it to a strategic buyer. Another example would be we invested in the number 11th largest steel company in Vietnam, and over the years helped this company come onto the stock market. And when we invested, there were about $400 or $500 million in value. Today, they trade on the stock market in Vietnam at over $10 billion in value. As you can see, it's gone up 20-fold over time, and it's slated to deliver about $1.5 billion of profit after tax this year. So a combination of holding on to taking a large position in the business and taking them to a trade sale as an exit, or taking these assets onto the stock market and holding on to them for the long term. This creates a uniqueness that we want to give to our investors, who can either stay for the long run by holding on to the shares for the long run, or if they choose to participate in the short run, they can always sell the shares. And during the time that they hold on to the shares, they can also enjoy the dividend that we pay out. We pay about 2.5% dividend per annum from the profits that we generate on the investments that we make in Vietnam.
Thank you, Andy. Thanks, Andy. That's really important. The quality of the portfolio allows us to generate sufficient income to share with our investors. So just on the next slide here, we thought we summarized what we do and what we don't. I do apologize that the font is a bit small, but really this summarizes some of the points that we've just been making. We do take high conviction positions. We don't have a diverse portfolio that tries to track any benchmark or index. We invest into businesses and we invest for the long term. We look at value, we look at the intrinsic value of our businesses. We really do perform a fundamental analysis of businesses that we look at. Again, if you look at metrics like portfolio turnover, it is very low. Our historical average portfolio turnover is in the mid-teens. Whereas if you look at perhaps ETF or other types of more liquid index tracking funds, their portfolio turnover is significantly higher. We don't believe that that's sort of a way that we should be investing in the market. We do look at across the investment spectrum, the liquidity spectrum. We're an opportunity fund, and that's sort of embedded in the name from the beginning, and that's really very much what we do. And when we do look at investment opportunities, we're not bound by these sort of liquidity restrictions or asset class restrictions. It's important that we roll up our sleeves and we do get into the businesses. We spend a lot of time understanding businesses. We also spend a lot of time understanding the ecosystem that the businesses we invest in are part of. We also do a very deep due diligence. The due diligence takes the four forms: financial, legal, operational, and ESG due diligence. And that's important because when you invest into private businesses, you can really get to a level of understanding that perhaps on public businesses, as very small percentage shareholders, you may not get those rights. We look for growth. We're investing the money to help companies grow. We're not really looking to refinance fund operations. And while we don't take significant positions, we do take minority control positions. And it's important that we have a role in the governance and the oversight functions within the businesses that we do invest in. If we can move to the next slide, please. I seem to have lost my connection. Thank you. Yeah. So again, this again just really briefly summarizes what the size of our investment looks like. We've very much covered much of this during the conversation. But as the fund gets larger, and as Andy mentioned just a few moments ago, the average ticket size we're looking today to invest is between 30 to 50 million. It's got to be meaningful. It's got to make an impact to the portfolio performance. Next slide, please. So I think what's important here is that, as we mentioned earlier, we've made about 200 investments in this fund since 2003. Much of those investments, as you can see, over 90 or almost 96% of these investments have come through some process. They're not one where we just buy on the public markets. Only about 4% have originated from buying on the public markets. Of course, over time, many of these private investments that we've made go IPO and they list, and the companies continue to deliver growth. We continue to be able to help them improve and enhance, and we continue to enjoy the capital appreciation there. But I think it's important for a market like Vietnam is to be able to enter opportunities where you have rights to be able to look into under the hood, so to speak, of these businesses. Next slide, please. Again, this really just sort of shows you that even though today you see about 75% of our portfolio is public equities, actually you sort of shift the lens, and if you look at how we entered these investments initially, 80% of it comes from these private equity, privately negotiated things. And then just moving on to the next slide. Oh, I think I've just got my web connection back. Thank you. Great. This here highlights some of the investments that we've made during the last financial year, so 2020, 2021. Also some of the divestments. And perhaps, Andy, you may want to have a discussion of some of the investments that we've made, for example, in the real estate companies, the edible oils business, and the banks.
Yeah. So the real estate company we invested is Novaland. It's a unique investment. We made about $90 million into this business late last year, December of 2020. The investment is what we call a structured products, where there's a clear entry and a clear exit. It's a convertible bond, if you will. And we also have a 25% warrant coverage. So we have the option to take 25% of the proceeds that we invested and acquire the ordinary shares in the market at the exercise price on the date that we enter. So effectively, we can exercise the right to buy the shares 2 years from the date we enter. And hopefully, the share prices have gone up quite nicely over the 2 years. And today, we've been into this investment for about 10, 11 months now. The share price have more than doubled. So the call options or the warrant in Novaland is significantly in the money. The remaining principal earns a 17% IRR, and it's also collateralized. So in short, it's a $90 million investment into a $3.5 billion business back then. Today is $7 billion. We have a bond structure where we get paid the principal and interest back. In addition, we have a 25% warrant coverage that allows us to enjoy the equity upside in this business over a period of 2 years. So that's just an example of an investment we recently did in real estate play. As you have up here on the slide, we've also had an investment in OCB, which is a tier 3 bank. We made the investment in about 2017 at a little less than $200 million in value. In January of this year, we helped the company go public at $1.45 billion in value. During that time, we helped the company restructure its NPLs, risk management, and also bring in a strategic shareholder into the bank. Today in November 2021, the bank is worth over $1.8 billion. So clearly, we've done very well in this investments over the last 3 to 4 years. That's just 2 examples. Back to you, Ken.
Thank you, Andy. Yes, and like equally, during the year, we've also been very disciplined in terms of exiting. Just want to highlight 2 examples here on this slide. VINAMilk. VINAMilk has been an investment that we made way back in as early as 2003. They originally were a state-owned enterprise. They privatized or equitized, as they call it in Vietnam. When we entered VINAMilk, their market cap was probably around about $400 million. Today, they're an $11, $12 billion company. They grew. They became the number 1 dairy milk company in Vietnam. And they played very much into this consumer story. Vietnamese consumers, rising incomes, emerging middle class, urbanization, that demographic dividend really began to embrace milk consumption. And for many years, you would see that VINAMilk was growing, high teens, 20% profit each year. We were able to enjoy that growth. Furthermore, VINAMilk was one of the first few companies that actually opened up their books to allow significant or potentially up to 100% foreign ownership. So it's been a darling of investors over the years. However, our view was that VINAMilk was, while it's a very good company, the earnings growth that it was able to deliver was slowing down and was much lower than what we would expect in our investments. This year, in fact, we're going to see potentially an earnings contraction. Next year, we'll probably see single-digit earnings growth. At one point, VINAMilk was over 20% of the portfolio. As of June this year, we've fully exited our position in VINAMilk. And as you can see, so over that period of time, from 2003 to 2021, we delivered an IRR of almost 50%. Or if you look at the amount of money we invested in, we made 400% on that. So VINAMilk has been a story where when we entered very early as part of that privatization process. But it's also a story of being a disciplined investor. And while it is still a darling of the portfolio investors, we felt that it didn't have a place in our portfolio anymore, and we fully exited. Pha, as Andy mentioned earlier, #1 construction material steel company in Vietnam, very much playing into this infrastructure development, urbanization, demand for steel in an economy that is still investing. And with that, the share price has increased significantly. Last year, the share price went up over 100%. I think it's about 115%. This year, the share price is up about 100% also. The point being is that as disciplined investors, we've begun to sell into that strength. So in order for us to keep that weight of the portfolio to under 20%, and we've taken the proceeds of those investments and made some of the investments that you can see up at the top line that Andy mentioned about. I just wanted to perhaps close up and move on to Q&A, but in wrapping up, I just wanted to sort of highlight last year's performance. Last year's performance, so the financial year ended 30 June 2021, we ended at 1.3 billion under management. Today, we're at 1.4 billion. We started that financial year at about 876 million. During that year, we've seen the portfolio gains of over 600 million, in which some were realized, others were unrealized. We distributed to our investors almost 60 million in the form of dividends and share buybacks. And it's important that we continue that form of distribution to shareholders. As was mentioned earlier, the quality of the portfolio, the natural income that the portfolio holdings are able to generate, allow us to cover that 2% dividend that we give back to shareholders. And we pay shareholders 1% every half year, 2% per year, and that's been consistent since 2016, and it's grown along with the NAV. So therefore, we ended the year 1.44 billion. Today, if you look at what the portfolio looks like, you can see that over 75% of the portfolio is in both public equities and investments that have not yet made it onto the main bourses, but they're essentially public equities. The private equity portfolio has actually grown smaller by the mere fact that the public equity has grown. The public markets have expanded, that part of the pie, or the whole pie itself has expanded. So the private equity portfolio today is about 11%, plus some structured credit investments we make. That brings it up to about 15%. And that's the part of the portfolio that we're looking and constantly trying to bring new investments in and feed into that. And so materials, real estate, and financials make up the top 3 sectors. And as you heard earlier from Mike and Ismail, those are the sectors that are going to show strong growth into 2022 as this recovery play takes hold. I just wanted to perhaps wrap up now with a couple of maybe 1 or 2 opportunities that we're looking at in terms of sectors. And I'll just hand it over to Andy, perhaps to highlight perhaps 1 or 2 sectors that we're looking at. And then following on from that, we'll move on to the Q&A.
Thanks, Gan. At the moment, we're quite excited about what's happening in the economy. We are going into a period of the post-COVID situation, and hopefully in 2022, we'll see GDP grow about 6 to 7% per annum, and obviously over the next 2 to 3 years, growing GDP at that rate as well. And as foreign investors, we are conscious of the local currency against the US dollars, and our chief economist and most of us do feel that the local currency, the VND, will appreciate against the US dollars in the coming years, simply because we are in a trade surplus situation. We do have quite a large reserve of US dollars, over $100 billion of US in reserve, which is over 4 months worth of imports. And we have a situation where people in Vietnam can leave money in the bank in local currency and actually earn a real return, a return that's above inflation. So a combination of these items have made the local currency more attractive than US dollars. And so with a growing economy, a strong and appreciating currency, it makes it much, much easier for foreign investors like us to look at some of the opportunities in the coming years. And I'm really excited to say that we have about $300 million worth of opportunities. One example is we like the hospital business, the healthcare businesses. We have 3 hospital platforms today. I'm hoping to add another hospital platform in the coming months. As well as exit one as well, because we've developed one platform to its maturity, and we hope to have a trade buyer that would give us an exit on one of our platform, allowing us to reinvest the proceeds into another platform. Now, bear in mind, we're the only investor in Vietnam that have actually invested in a platform, in a hospital platform, and exited. We did this about 4 or 5 years ago, and we made a significant amount of money on that investment. Therefore, it gave us a lot of experience to invest in the next 2, 3, and 4th hospital platform that we have today. Another investment opportunity we're looking at is we like materials, construction material. Not steel. We have steel already. We have it in the form of investing in a company called HPG, but other types of construction material, simply because we believe that the government's going to spend money on the infrastructure and the fiscal spending, the economy, like Mike said, roughly 10% of GDP. A lot of this money will go towards infrastructure. That's gonna allow materials, construction material demand to increase in the next 2 or 3 years. And further to that, as the economy grows at 6 to 7% per annum, as you can imagine, a lot of people are getting wealthier and wealthier every day. And as they get wealthier, they are going to buy apartments, they're going to buy homes. And so what you see as the infrastructure builds out, the value and the demand for apartments also go up significantly in the suburban area or the outskirts of the city. So we're excited about that. Let's just give you a couple examples of opportunities that we're looking at today. But in short, we want to thank you very much for giving us your attention. We believe Vietnam has a great opportunity over the next 3 to 5 years. And it's a great opportunity for you to invest in the shares. And if you think that you've made enough profit or you're not happy with it, you can sell the shares anytime. We're very liquid. And we hope for you to stay with us in the long run. We do pay dividend, and hopefully in the long run, we can deliver a return that's 15 to 20% steadily over the next 3 to 5 years. With that, I think we're going to open up for some Q&A. Is that right, gentlemen?
Thank you, Andy. Yes.
That's fantastic, Andy. Thank you very much indeed, and thank you to the team for your presentation. Just a reminder, the attendees, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that recording the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. Perhaps before we go on to some of the live Q&A, we did have some pre-submitted questions from investors, and if I may, I'm just going to read those out, and if I can direct them to you, and you can give your responses or pass them out to the team.
Thank you.
The first question we have here reads as follows. How does the Vietnam Opportunities Fund differ from its peers, Vietnam Enterprise Investments and Vietnam Holdings Limited?
Andy, can I give this one to you?
Yeah, happy to focus on this question. Look, the reality is we focus on private businesses, what we call private equity or alternative assets. I think a lot of funds, including Vail, focuses on the listed asset, the shares that are listed on the stock market. And this is similar to ETFs. It's similar to open-ended funds. So we find that investors have a lot of options when they want access to publicly listed assets, whether the ETFs, open-ended funds, or even Vail, which is listed in London. What we want to give our investors is exposure to the private side. We're picking up 5 to 30% of businesses when they're private, helping them grow, making sure that they adhere to international standards when it comes to ESG, financials, legal, And as a result, and corporate governance as well. And as a result, over the years, we can sell them to a strategic buyer while they stay private, or taking them onto the stock market. So the uniqueness is that we're giving investors access to private businesses as well as public businesses in a fund that actually pays dividend. We're the only fund that pays dividend, by the way.
And the next question we've got here, I think you've covered some of this off actually, Andy, in your previous answer, but what are the advantages of pursuing a PE-led strategy in Vietnam?
Yeah, I mean, this is to me, it's a clear advantage. I think it's akin to buying a used car. When you buy a used car, you want an opportunity to open up the hood and look inside the engine and test drive it. And so that's what we do with private equity investment. We have a chance to look under the hood. We do due diligence on the financial side, the legal side, and ESG. If we find that the business is polluting the water, it's okay. We know they're polluting the water. The key is to work with management and the board to improve that, to stop the pollution. Because by making the improvement in ESG, we create value. By making the improvement in corporate governance, we create value. And all this under the fact that it's growing. It's a growing business from top line to bottom line. So we have a number of factors that increase the shareholder value. One is the performance of the business. Two is adhering to international standards when it comes to corporate governance and ESG. All that combined creates a much, much more valuable business when it comes to a private side. So that's why we think it's a unique advantage that we have to investing in a place like Vietnam. And the other thing is you have to understand that a lot of these private businesses are illiquid. So we have to approach it from a private equity perspective. We have to look at what is the downside, what is the risk before we make the investment. Because once we make the investment, we really have to roll up our sleeve and help the business grow. We can't walk away from the business because they've done something wrong. In a listed situation, in listed companies, if something goes wrong, you can sell the shares and move on. We can't do that. We have to work with the business in terms of management, governance, products, even ESG to help grow it and create value. And this is the uniqueness of Vietnam and VINACAPITAL Fund.
That's fantastic. Thank you very much indeed, Andy. The next question we've got here is, what are the team most excited about in 2022?
So can I ask maybe Ismail can answer that, because he's got a broader picture of the market, and maybe Mike after that?
Yeah. Hi. So in terms of market opportunities, as I mentioned earlier, we're probably entering the recovery phase of this market. That is typically a great opportunity where the market sees a bounce. And I think we're seeing signs of that. As I mentioned, VNI just set a new record just a few days ago, and we expect this momentum to carry us through 2022. Most investors will look at emerging, if not frontier markets, in terms of the banking sector. And the reason behind that is it typically accounts for the big chunk of any index. It's also a proxy to the economy. So there's alignment with regards to what you see in terms of the economics picture, as well as what's happening in terms of so-called the market. Other things that we like are probably real estate. The penetration rate is still relatively low, but at the same time, there's a lot of opportunities in terms of what's happening in terms of reopening, where a lot more people may get a chance to actually visit the show sites. The pre-sales will hopefully increase. And hopefully there's also going to be some easing with regards to potential restrictions in some companies with regards to the way they do the property. And of course, consumer discretionary, pent-up demand, whether people income has been affected or not, it'll still happen. In Vietnam, even things were not open yet. People were out and about just to walk the roads. I mean, the freedom that we've had after 4 months of strict lockdowns is probably going to hopefully translate to that pent-up demand in terms of spending. And I guess materials selectively, and infrastructure spending build out. Again, Mike can probably elaborate on this. They may be targeting anywhere from 6 to 7% to GDP, and that has a long runway. We believe that there's a lot of opportunity for that to continue, and there's no better time than now for that to begin. Mike?
Yeah, the only thing I would add to what Andy and Ismail said is that the consensus is that the GDP will grow by about 6.5% next year. And my personal opinion, when I go through all the numbers and the calculations, is that this is far too low. So I think the GDP is going to be much higher than most people expect next year. And when I say that, let me just qualify my prediction by also mentioning last year in 2020, and also again this year in 2021, our firm was quite a bit more pessimistic I would say, realistic than a lot of our peers. So when I make a prediction that next year is going to be actually a lot better than what people expect, I'm making that from what I consider to be a very realistic position. So next year is going to be much stronger than most people realize, I believe.
So these two gentlemen really tapped into roughly 60 to 70% of our portfolio. That's the listed component. So if the economy grows and the sector that Ismail mentioned is going to grow, then that 60, 70% of the portfolio will benefit. And then it leaves the private side. So what I'm excited about the private side is that the entrepreneurship in Vietnam is one of the highest in the world. I think there was a survey a few years back, the Pew survey, that says Vietnam's entrepreneurship from a capitalism perspective is #1 in the world. That means they're creating new businesses, new ideas, and these businesses are going to come up, and we are excited to make these investments in them. But I think the key thing for us for the next 3 to 5 years is to help them create quality businesses and to take them outside of the borders of Vietnam. Help them deliver their goods and services in the region and in the international. So that's the key component for us to take on over the next 3 to 5 years. And I'm excited to have identified roughly 3 to 5 companies that have a great opportunity to be an international players in the next 3 to 5 years.
Andy, thank you very much indeed. We did have a couple of more pre-submitted questions, but I think we've covered those off, which really related to the NAV performance and also the COVID impact. So just on the basis of conscious of time, Kyle, if I may just hand back to you, we've had a number of questions submitted during the presentation itself. You could just click on that Q&A tab, and where appropriate to do so, read out the question, even who it's from, and just distribute it to the team. That'd be fantastic. Thank you.
Thanks very much. I'm very conscious we've got sort of 5 minutes left, so and some of these we've answered. For those that we aren't able to answer in the interest of time, we'll take them away and we'll come back to the questions that were asked. So one of the questions here submitted by Andrew H, and perhaps this is one for you, Ismail, is how far away is Vietnam from being added to the emerging market index?
Sure. So this is almost like $1 million question in the sense that it's been long awaited whether there would be an ascension for Vietnam to go to emerging market status. At the moment, they're in the FM frontier market basket of about 30+% given the performance. And the question here is, when will this happen? We believe this is contingent on foreign ownership limits being lifted. One aspect of MSCI is, of course, liquidity. But with FOL, there is some aspect of restriction. There's been some exploration with regards to NVDRs, non-voting depository receipts, patterned after perhaps Thailand. But we don't think that's necessarily going to happen because from our indications, from speaking with people on the ground, they may be just looking at the FOL as a focus. And nowadays, investors, especially with a focus on ESG, they don't want to give away those voting rights. The ability to act as a steward with regards to those issues is something that's quite valuable and will continue to be sought after. Mind you, when you look at markets that have ascended to emerging status, Pakistan, Qatar, Saudi Arabia, Kuwait, there's really about an 18 to 24-month runway in the sense that investors know it's going to happen. And so I don't think we're going to miss out by any means of imagination once Vietnam gets into that radar of potential ascendancy into emerging market status. So the time frame is still a moving target, but timing for investors, I don't think we're too concerned about that.
Thanks. I'm going to combine the next two questions and hand this one to you, Mike. It does relate around China and the opportunities that Vietnam may have. So Simon D asked, will the reported elevated levels of COVID in China have a potential detrimental effect on Vietnam's opportunities and market sentiment? And from Mary E, are the plans to benefit in any way from the transition of that manufacturing of the tech sector away from China? Will that benefit Vietnam? So first one is about COVID and whether it's going to have a
So on the first question, the U.S. is Vietnam's biggest export market. So this is the one we really have to care the most about. Vietnam has a very big trade deficit with China. That means we buy more stuff from them than we sell. So it's not really such a big problem for us if their economy slows down. That having been said, you know that these supply chain issues in China, kind of percolate all over the world. And, there's a lot of manufacturing companies here that we need to get parts and materials from China. So that could have an impact, if the port closed or something like that. And that kind of leads nicely into the second question, which is about the electronics and high-tech manufacturing. I think the wording in the question was something along the lines of, is there a plan, to benefit from this? And I'll give you a little bit of a cheeky answer, which is that there doesn't need to be a plan because it's just going to happen naturally anyhow. I mean, factory wages in Vietnam are 2/3 below those in China. The quality of the workforce in Vietnam is quite comparable compared to China. And that's according to surveys from Jetro and others. Samsung has got their biggest factory outside of Korea here, or actually the biggest factory in the world here. So that's going to happen anyhow. There's a lot of surveys that by people like UBS, The Economist magazine, and others that predict that about 20% of the industrial manufacturing in China is going to leave over the next 10 years. And so that's just going to happen. So we'll get some of that just, by virtue of the fact of where we are, the workforce, geographic, et cetera.
Thank you. Thank you for that. And then perhaps just in the interest of time, the final question here. And Andy, I'm going to pass this one over to you. We're here in the UK. We've seen, we're in Edinburgh yesterday. It's really busy with delegates from COP26. There's a lot of news on the headlines about the commitments to net zero. The Vietnamese government was here. The Prime Minister was in COP26 to sort of express Vietnam's commitment to green energy and net zero. One of the questions here from Alistair G was, how do we see this energy transition benefit Vietnam, and are there other actually opportunities to invest into this energy transition?
Yeah, I think what's happening in Vietnam is, as you may or may not heard from the Prime Minister of Vietnam, Vietnam is signed up to support this global climate initiative. I think from a more practical level in Vietnam, we are moving towards more and more renewable energy, whether it's wind, solar, and then hydro power plants as well. And I think some would argue that LNG would fall into that bucket as well. But there is a concerted effort to move away from coal energy to more renewable energy. And that creates a lot of opportunities to invest. And in fact, if you look at the last 18 months, there was a concerted effort to get folks to tap into the solar energy. And the government gave a very attractive tariff through a PPA agreement if they can turn on the electricity from solar by, I think, the July of 2019. That was the deadline. A lot of people, invested in solar. They connected in, and now Vietnam has the highest penetration of solar energy in Southeast Asia. Just over a period of roughly 2 to 3 years, they've gone from very little to the highest in Southeast Asia. And it's through a concerted effort by the government to provide economic incentive for those who want to invest in the solar panel space. And so over time, I think the government understands how to motivate investors to invest in these renewable energy. And I think the government will use more and more of those economic motivation to start slowly shifting away from cold energy into renewable energy. I hope that helps.
Carla, I think, as you said, we're just coming up to the hour mark, and we have received a number of further questions from the investors. So thank you very much indeed for submitting those. Of course, the team will be able to review all the questions submitted today, and we'll publish responses where appropriate to do so on the Investor Meet Company platform. You'll be notified once they're ready for your review. Perhaps before we just redirect the attendees to give you some feedback, Andy, if I may, just a few closing remarks, please.
I think I gave my closing remark earlier, but in short, we hope that you're interested in Vietnam, and clearly the travel restriction it's restrictive effectively, but hopefully in 2022 we'll open up the travel for tourism again and for investors to come visit. We again and hope to see folks like yourself in the coming year. We very much welcome your visit. Let us know if you do come, and we're happy to sit down with you, explain what we do more in depth. But we are excited about Vietnam on the back of the fact that there's a growing economy, 6 to 7% per annum. We have a young population as well. Roughly 60% of the population is under the age of 35, and they're producing. They're producing for the economy. And like I said earlier, the currency is quite stable. So the elements to make it attractive for foreign investments are there, and it's just there for us to take the opportunities, create value, and find the exits in a 3, 5, 7 year time frame. Thank you.
That's absolutely fantastic. I'd like to thank the team for VINACAPITAL Vietnam Opportunities Fund for the presentation today. Could I please ask attendees not to close the session and should be automatically redirected for the opportunity to provide your feedback in order that the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the team. On behalf of the management team of VINACAPITAL Vietnam Opportunity Fund Limited, we'd like to thank you for attending today's presentation. That now concludes today's session. Thank you very much and good morning to you all.